Welcome to Barchart's weekly series of webinars designed to help you, the investor trader, better understand a variety of trading ideas and concepts, as well as the pages and tools Barchart provides to help you make a more informed investment decision. Today's subject, top-down chart analysis. In today's modern technical analysis, trend recognition is crucial to the success of any trading plan. But I often hear from traders who lament, which time frame should I use, or what trend am I seeing? Is it up or down or sideways? What if I told you that trend analysis is as easy as reading a tidal chart that tells you when it's going to be high tide or low tide, if the tide is rolling in or out, and all you have to decide is what is the weather? Is it going to be calm or stormy? Hello, everyone. My name is John Rowland, Barchart's head of trading education, and today we're going to look at top-down chart analysis, which is a multi-time frame analysis that combines trend recognition with chart patterns, supply and demand, and something most traders are maybe not aware of, something called fractals, a theory that market price movements repeats themselves throughout all time frames, regardless of the scale. With me today is my partner and our moderator, Barchart's project director, Gene Baker. Hello, Gene.
Well, hi, John. How are you today?
I am doing fine. I'm in a good mood, and I'm looking forward to today's session. How are you doing?
Just great. Yeah, we're looking forward to today as well.
How's the weather out there in the Chi-town?
It's absolutely gorgeous. Wish it was like this all year long.
Like free air conditioning, right?
Oh, absolutely. It's going to get a little warmer this afternoon, but it's nice.
Are the leaves changing?
Yes, they've been actually starting to change for a while. My one neighbor's tree has unfortunately already dropped all its leaves, but yeah, we'll get some color here in the next few weeks as well.
Well, I'm looking forward to that season. I love that part of fall. All right, so let's get started. All right, today's session is for educational purposes only, and all trading has inherent risk. We at Barchart advise that you seek the advice of a professional financial advisor to see, if you are able to bear risk in light of your financial condition. And today's session should not be construed or as a recommendation or endorsement to trade any specific stock, market, or asset class. And under no circumstances shall we be liable for any loss or damages incurred as a result of trading or investment activity based on any information that you receive through barchart.com. All right, top-down analysis. Well, as I said in the lead, this is a multi-time frame analysis. What we're going to do is we're going to look at a higher time frame. This is going to give us a longer term trend. I want you to think about this in terms of this is going to tell us our high and low tide mark. In other words, where we think prices are relatively low or prices are relatively high. And we're going to go to an intermediate or a secondary trend. And this is going to tell us if prices are rising, our tide is rising, or is it falling? And then we'll go down to a smaller time frame to tell us the velocity of the movement of our trends, but also to help us pinpoint entries and exits based on the trends of these higher time frames. We're then going to direct our focus on price patterns and formations found in other types of technical analysis disciplines to find confirmations in and the patience to wait for these higher probability areas. Now, I'm going to bring into something new that for many of you, and this is called fractals. And what a fractal is, well, in nature, maybe you've seen a nautilus shell cut in half, right? Or maybe you've heard of something called, Fibonacci's, or the golden ratio, 1.618, right? Something nice and smooth and complex at the same time. Well, fractals are far from being smooth. They're actually very rough. And today's price charts are far from being smooth. They're really chaotic if you think about it, right? And what fractals does is it helps us find regularity inside of this chaos or these irregularities, right? So we're going to discover that there are certain fractal patterns that repeat regardless of the scale. And what we're going to do is we're going to zone in on these higher time frame patterns and then find the corresponding fractal at lower and lower time frames, hence top down. All right. So here is a picture of the Nasdaq on about August 30th. And it was as the Nasdaq was making a new all-time high, an extension of this continuing uptrend. Excuse me. What I wanted you to notice here is, regardless of the data set, the time frame, weekly, daily, hourly, or 5 minutes, the price pattern is repeating itself. And this is a representation of the fractal nature of markets. And this is how we're going to break down our top-down analysis. In this case, all time frames are trending up, and we see the same fractal pattern. Okay? So, what are fractal patterns, or what are some of the fractal patterns we can talk about? Something that we've discussed in previous webinars, and I'll show you how to find those at the end of today's session. Something we've talked about is called the cycle of price. And what I'm going to do is I'm going to show you 4 fractal patterns that represent different phases of price movements, or in other words, potential trend movements. And those 4 phases are a rally-based drop. That's where price is rising and then falls. A drop-based drop, that's where price is falling. A drop-based rally, that's where price is falling then rises. And then a rally-based rally, that is where price is rising. Now, each of these phases is a confirmation or a change of who's in control. In other words, who, buyers or sellers, right? Who is buying the market or who is selling the market. And these fractal patterns are going to contain those chart patterns and those candlestick formations that many of you are familiar with. So a rally-based drop. This is a price reversal or a trend changing pattern. Again, a change in price movement or potential change in trend. And there are some of the candlestick formations that are typically found in this fractal formation. We have a drop-based drop. This is a price continuation or a trend confirming downtrend. We have a drop-based rally. This is a price reversal, again, reversing from the down to the up, or a trend changing reversal. And finally, we have a rally-based rally. This is a price continuation or a trend confirming uptrend. So these patterns, these fractal patterns, tell us who's in control, but they also show us potential areas of support and resistance as price is moving from or away these areas of support and resistance. And so we're going to look at these 4 fractal patterns in areas of support and resistance. And a lot of traders refer to these as supply and demand. And supply and demand is a price theory that believes that these areas represent these imbalances between our buyers and sellers. So a supply zone, or an area of resistance, is where we see a greater amount, or we'll find a greater amount of sell orders over buy orders, and therefore we result in pushing prices down. A demand zone has a greater amount of buy orders, or represents an area of support, and typically pushes prices up. And just like our fractal counterparts, supply and demand can be found in all time frames. And our candlestick formations, the ones that we know of or are aware of, are the confirmation of these zones. So what we're going to do in our top-down analysis is we're going to tie together these three concepts: multiple time frame analysis, fractals, supply and demand, and those candlestick formation patterns that are confirmations of different types of trend or price movement. All right, so I want to go through the steps of top-down analysis. Now, I know I did go through a little bit of material there a little bit quick. I will remind everybody that our sessions are recorded, so you'll have an opportunity to review this if that's what you want to do. So what are some of the steps to top-down analysis, or how do we perform this process, right? Well, because this is a multi-time frame analysis, we're going to pick 3 different time frames. Now, a little bit more about how we go about picking that later. So first is our highest time frame, right? And what we're going to do is we're going to start at current price. And so our highest time frame is going to tell us if prices are cheap, low tide, or expensive, high tide. And then what we're going to do is we're going to identify the trend. In other words, we're going to call this our primary trend, our big picture, right? What's the big picture of this particular market? And then where is price in one of those 4 phases, our cycle of price? Is it a rally-based drop reversing to the downside? Is it a drop-based drop falling? Is it a drop-based rally reversing to the up? Or is it a rally-based rally rising? And then what we're going to do is we're going to draw 2 supply zones and 2 demand zones from current price, the closest and nearest to us, the most recent ones, right? So sometimes when we're in strong uptrends or strong downtrends, it might be difficult to identify an opposing counterpart supply or demand zone. And that's because especially our trend, might be continuing for a long period of time, and it's continuing to take out those opposing zones. But this is how we're going to frame price, right? And how we're going to, in terms of high and low, we're going to look at the distance where current price is from our nearest support or demand zone and our nearest supply zone, right? And then what we're going to do is we're going to start looking for those price confirming candlestick patterns that are going to be telling us if our trend is up or down, or is reversing, or our price action is changing. And then we're going to drop down to an intermediate time frame. We're going to repeat this process again. We're going to identify the trend in the intermediate time frame. We're going to call this our secondary trend. And our secondary trend is really telling us, is our tide, or is prices rising, or are prices falling in relationship to our higher time frame? We're going to identify which phase we're in again, right? And we're going to draw 1 supply and 1 demand zone from the nearest or most recent. And this, again, will give us an idea of where we are in rising or falling tide, but also we're going to use these as starting to zone in to look for entries and potential exits or targets. And then what we're going to do is start checking for what we call fractal similarity, right? Is there some similarity between the pictures that I'm seeing at the higher time frame with what I'm seeing in this intermediate time frame, right? Are the pictures the same, the fractals the same? Are they with my trend? Are they with my price movement? Or are they against or counter? And are the zones that I'm going to draw, is my intermediate inside of my higher time frame, or is it outside of my higher time frame? And this will give me a better understanding and a better patience of what zones that I want to look for. The higher the probability. And then what we're going to do is we're going to drill down even farther. We're going to go into our lowest time frame. And we're not going to really be concerned about ourselves about trend and cycle of price at this point, though we do want to find similarities as we go down to these lower time frames. Instead, what we're going to do is we're going to drill down inside of those higher time frame, those intermediate time frame areas or zones of similarity to find the representing repeating pattern. In other words, if I'm in a drop-based rally cycle in my higher and intermediate time frame, I probably want to see the lower time frame coming to me on a downtrend, but I want to see the price do a drop-based rally. In other words, wait for our confirmation that I'm seeing the same fractal throughout all time frames. Breaking these supply and demand zones down based on our higher time frame analysis. All right, so I said that how do we go about picking a particular time frame or 3 time frames? So your style of trading is going to determine your time frames. Wealth, swing, day traders, right? Whatever time frame or style trading is going to dictate that. So, for example, a wealth trader, is looking at a longer period of time. So they would probably use something like a monthly as their higher time frame, weekly as their intermediate, and daily as looking for opportunities to enter and exit the market. A swing trader who maybe will be a position trader for about a week or so will probably use a weekly higher time frame and use a daily as a secondary trend analysis. And then again, break it down. We'll look at maybe between 2 and 4 hours intraday to look for those areas of entry and exit. And a day trader, right? And so I've given a couple examples here for a day trader, a daily, 4 hours hourly, or you could even go down farther. You could go maybe 4 hours, hour, 15 minutes. Now you can use a fourth time frame. Sometimes what is called a refining time frame. Now, what we would do with a refining time frame is we're just going to use it to help us lower our dollar risk. In other words, lower our potential cost of entry and trade. And we're not going to rely on it on picking if we're going to go long or short. It's just going to be a way to help us lower our dollar cost. So hopefully I'll be able to give you an example of that. So how are we going to choose a time frame, right? So depending on our style of trader, if I'm looking at a larger amount of time, from year to year, then I'm going to probably be a monthly, weekly, daily type time frame analysis. And then if I'm a day trader, I'm going to be working more in the micro. But as I pick my high, intermediate, and smaller timeframes, what I want to do is I want to move in a fractal scale, somewhere between 4 and 6 times factor. So Wealth, right? Monthly. Well, how many weeks are in a month? 4. How many days are in a week? 5, right? A factor of 4 to 6. Swing traders. Weekly. How many days in a week? 5. How many 4-hour periods in one day? 6, right? Maybe your market you're trading doesn't trade 24 hours. Maybe it only trades 12 hours or 8 hours or 6.5 hours. Like it's not right. So maybe then your lower fractal will be a factor of 4 or 5 below your secondary trend time frame. Right? Now, the higher the time frame you choose, the greater the probability of the trend analysis that you're going to create. So let me really kind of talk to my day traders here, okay? So if you're using micro time frames, let's say a 5-minute time frame to do your analysis. Now, I'm not against this and this practice, and I'm not saying it's wrong. But to me, a former exclusively day trader, it's like determining if a wave is going to rise or fall based on the next ripple in that wave. And, regardless of your style of trading, I believe that because most technical analysis is grounded in daily price movements, daily has to be one of your time frames, either your highest, your intermediate, or your lowest. Could we have multiple intermediate time frames? Yeah, we could. If I'm a day trader and I'm using micro time frames, let's say 4 hours down to 5 minutes, I still want to be able to go back to daily to give me that big picture look, right? I don't want to get sucked into this vortex of working in smaller and smaller time frames. Because what I'll discover is that a lot of times I might be taking a long or short, and if I took that step back and look in the big picture, I might be buying super high in the high tide or in the high coming towards an area of supply, or I could be selling super low in the tide. In other words, I'd be selling in the demand zone, and I don't want to be doing that, right? I want to be buying in demand and selling in supply. Okay. All right, so let's see if we can go through a couple examples and figure this out. All right, so here I'm on the S&P index. And so one of the cool features that we have in our interactive charts is over here it says grid view. And remember our first step, we said we kind of just want to identify trend. So if I click on grid view, notice I have a couple of different options. I can do 2 vertical grids or 2 horizontal grids, or I can pick 4. So let's pick 4. And what this does now is it takes the S&P, it's going to break it up into 4 different time frames for us. And I can configure this how I want to look at based on my trend analysis I want. I can change it by the data, the time of data, and I can change it by the frequency. So this is a 5-day chart for 60 minutes. And what I'm doing is I'm bringing the most recent high, all-time high into picture. Here's a 1-month chart with 240 minutes. Again, I'm just bringing in the most recent all-time high. Here's a daily over a year, right? I could lower this down to, 6 months. And then here's a weekly over the last 3 years. I could do a weekly over the last year if that's what I wanted to do, all right? And so what do we say? We're going to start at our higher time frame and we're going to do our trend analysis. Now, if I'm looking at this weekly, yearly trend, right, it looks like the market has been in an uptrend. But as of recent, right, we could make an argument that our uptrend has been broken, right? Maybe a trend line break. Now, is this a downtrend? I don't think so, right? An uptrend is defined by higher highs and higher lows. A downtrend is defined by lower highs and lower lows. Now, we did make a high and we did make a low, but that's only one. We need a lower low and a lower high. Now we have on a weekly basis are making a lower high. We have yet to make a lower low. So this trend right now is not a downtrend. It's certainly not an uptrend anymore. And I would say right now we're in decision or in translating from maybe a long-term uptrend to maybe a downtrend, but it won't be confirmed a downtrend until we make a new low right about there. Now let's look at our daily. Well, this one is very easy to see that our uptrend has been broken. And again, though, if I think about what trend we're in here currently, again, we haven't made that second new low to confirm a downtrend. So this is still a market that is in sideways or in transition. We don't know which way we're going to go. If I believe the market is going to go up or we're going to start a new uptrend, right, then I need the market to make a new high, right? I need to at least take out the supply that is above my head. If I believe this market is in a downtrend, I still need to wait for the market to make a new low. What's going on in our monthly 240? Again, I think you can see that looks like we're in a downtrend, but again, we've gone from high to low. We have that second lower high. We still don't have that second lower low. So again, we're in another sideways market. And our 5-day, 60-minute is showing the same thing. But let's look at this in big picture, right? In terms of our cycle of price. Right? Look how we can see that the fractals look very similar. And where are we right now? Well, looks like I'm seeing a lot more rally-based drops. Rally-based drops, rally-based drops, rally-based drops, rally-based drops, rally-based drops. And rally-based drops are a change in price direction or a change in trend. So there is something going on in the S&P. All right, so I'm going to turn the grid off. And let's go through our process. We've just did trend analysis, right? I'm going to blow this up, pop this out a little bit so it's a little bit easier for us to see. Let's go to our weekly. And let's kind of make this a little bit bigger for you guys so you can see it. All right. Okay, good. All right, so we discovered that we're in a sideways trend, maybe on the way to becoming a new downtrend. If I believe the market is going to start a new uptrend, I still need to make a higher high, right, above this most area. What is my phase of price? Well, in the weekly here, if I'm looking at structure, I'm just looking at purely at the candles, I see that we've just come from a rally base drop. Now we could be starting to make a base drop, which would be the second leg of a downtrend, but again, we still need to get below here. Here's current price. I go down into the left to look for potential demand zones. Now I don't see any good structure in terms of weekly charts until I come all the way back here, a drop base rally, and as a candlestick formation. It's not really an engulfing. I'd say that's probably more like a piercing line, but it's certainly where price fell first and then gapped up higher on a weekly basis and finished the week higher. So that would be a drop base rally. If I look up into the left at structure, again, I really only find one supply zone or one area fractal formation, and that's because the market has been in this torrid uptrend. If I go to my secondary time frame, let's say daily, okay, and again, I'm going to start at current price, and I'm going to look for, again, that structure and also those fractal formations, right? So rally-based drop. Price rallied here on this green candle, based and dropped. Price rallied up here, based and dropped. The third thing I said to you is now do we recognize any types of candlestick formations that could confirm to us price action? Well, I see a doji, right? And a doji where price gapped lower. That is certainly a indecision reinforcing a down price movement. Here we have a hangman, again, a change in price action, right? Don't really see a good structure candlestick wise up here, but this is definitely where price rallied first and then fell down. So we're seeing a series of rally-based drops. Okay, now I want you to notice these boxes as I drop down to our lower time frame. Now I'm in 1 month and I'm looking at 60-minute time frames. And there is that box that was our doji at our intermediate time frame. And notice inside that box, here we see that fractal recognition. Rally-based drop, rally-based drop, rally-based drop. That's telling us that sellers are in control. Here's our hangman. Rally-based drop, rally-based drop. And let's look at that topping formation that we saw in our weekly box. Rally-based drop, rally-based drop, rally-based drop, rally-based drop, rally-based drop. Now, which is kind of cool about this one is looks like the market is transitioning, right, from what we normally would have thought of in the stock market recently as buying the dip, right, buying drop-based rallies, right? And what we're now starting to see is if we look at some of these candles, these big red candles, now notice the time as I go down to the bottom, 9 o'clock in the morning, right? 1 o'clock in the afternoon, 9 o'clock in the morning, 10 o'clock in the morning, 11 o'clock, 9 o'clock, 9 o'clock, big drop, 9 o'clock. What we're seeing here now is that there's a lot of selling coming into the stock market in the opening session, the opening hour of trading. Now, normally novices open the market and professionals close the market. But what I think we're seeing here is a transition from buying the dip to what we call selling the rip. In other words, selling rally mode. And certainly that is what we're seeing throughout the market over the most recent days. Again, we're not in a downtrend, but the fractals don't lie. And the fractals are showing us that who's in control? Well, sellers right now are in control. And then if I believe the market is going to go higher, I need the market to take out these areas of supply, these areas where sellers were in control. And every time the market looks like it tries to do that, it backs off. Again, not in a downtrend, probably just in a sideways trend, and that we could go in a sideways trend for a long period of time. Now, if we do break this area of support, or if I go back to my intermediate time frame and I'm looking for structure, here is a nice piece of structure here, right? What's that? 4,300 for the S&P, right? Here's another piece of structure down around 4,230. If I look at the daily, the weekly, right? Thinking about where are we in terms of high or low tide, we would definitely say we're at the high end of this range. We're at high tide. And if I was going to be a buyer, I want to wait for a better buying opportunity. If I look for potential structure in terms of a weekly chart, right, I think we'd have to think about all the way back to here where price broke out of a previous all-time high and then rallied away. Now, I'm not predicting that the S&P market is going to go to 4,000. I'm just saying that in terms of my high and low tide, we are certainly at the high end range, and that in order to make the market look more valuable, or in terms of fractals, probably want to see price move down. Now, if price holds here and rallies up and takes out the all-time high, then all bets are off. But until then, we're really in a time of indecision. We need to wait for the market to make a decision one way or the other. Okay, so that's kind of how we do top-down analysis. There are some tools we have in Barchart that allows us to look at these kind of candlestick formations and incorporate it in our top-down analysis. So if I go to the stock section, and under stock market ideas, we have something called Candlestick Patterns. And if I open that up, I'll get to this page. Whoops, let me go back one. I'll get to this page. And in this page, we have about 15 different common candlestick formations. And what you can do is, what it's telling you is that right now at a daily time frame, these different stocks are representing or performing that type of candlestick. And so I like to look at a few of my favorite ones. And bullish engulfing is definitely one of my favorite. Bearish engulfing is another one of my favorites. And right now it's saying that all these stocks are showing the characteristics of a bullish engulfing candlestick, right? And I could go into each one of these and look at for opportunities. But notice over here, it says weekly question mark. And what this does is it also takes the data and looks at these candlestick formations in terms of a weekly set. And what we want to do is we want to kind of find markets that are performing the same candlestick formation. Again, think about this in terms of fractal recognition in the daily time frame as it is in the weekly. Now, a weekly candle doesn't close until Friday afternoon. So this is really kind of a process that I use at the end of the week. Now, to be honest with you, on Friday at 4 o'clock, I'm not thinking about trading, right? I don't know about you. Probably have a cocktail in my hand. But on Sunday nights, I will come into this page and look for some potential trading opportunities. So that's what this is. This is last Friday's close, and it's the candlestick pattern page, the bullish engulfing. And like I said, those are bullish engulfing and bearish engulfing. I like those ones because those usually are found in trend changings or accelerations of trends. And two of them came out. Now, I don't know if I'm going to have enough time to go into both of these. But the one that I want to show you is this TK tankers. Notice it says pattern was repeating at the weekly basis. All right. Excuse me, that's my phone. All right, so here's a weekly, the TK tankers. And again, let's blow this up. Let's pop this out so we can do our top-down analysis. Now, I'm in the 6-month daily. Remember, our engulfing pattern was first found at the daily. And here is September 24th. There is that engulfing, right? That engulfing candlestick. Now, let's think about this. What's our process? What's our trend? Well, looking at just from this point on, it certainly looks like we're in an uptrend, right? We've made 2 higher lows and we are now making a higher high. What is our fractal formation? Well, we've gone from a drop base rally to a rally base rally, a trend confirming fractal. What's our candlestick? Well, this looks like a harami, and this looks like a hammer. Another 2 bullish candlestick formations. Now, if I go for current price and look for a potential demand zone, probably right here. Currently, there is one being created on this Friday, which would be right here. right? And then where's my nearest supply zone? Well, up here. And so if we looked at the distance between these demand zones and this supply zone, where would we consider it in terms of our tide? Well, we're at the lower end of this range. We're in low tide in a rising market, an opportunity to go long. Now, unfortunately, Monday morning came and boom, we rallied right up into that supply zone. So for a swing trader or a long-term trend trader, you probably, might have missed this opportunity for now. My day traders would say, hey, I've definitely missed this. Well, not necessarily, right? Day traders, think about this. Here is your weekly high, and the market opens up Monday morning above this resistance. This is a classic gap and go trade. And this thing moved about $1 on a $13 stock, which was what, about 8.5%, 8%. I think a day trader, if I told you in the morning I'm going to give you 8% and a price movement in a stock, every day trader in this room right now would raise their hand and line up for that trade. But as far as a swing trader, we've now moved from low tide to high tide, and the market has found exactly where we thought it would pause. In other words, it's found an area of supply. Now let's just break down this supply zone at a lower time frame in terms of setting a potential target, or if you wanted to take a short if you believe this was a downtrend. And there is that little circle. And let me make this nice and big for you so you can see it. And what do we see? Well, what fractal formation is that? A rally base drop. Confirmation of a change in price, potentially change in trend, confirmation that there are more sellers than buyers. Now notice what happened. Price gapped lower. Price came back, filled the gap, but did not get above this line. So let's move this red line here just above those two little candles where price came back and filled that gap. Let's go back to current price. Look what our stock did. Went right into that zone, found those selling orders, and has backed away. If I'm looking to go long this market, I'm probably going to need price to retreat low in my tide. Probably need this lower time frame to trend lower. But remember, I'm looking at the big picture. And let's go back to our weekly chart and think about this in terms of trend in our fractals. Where did price pause? Right in that drop-based drop on the weekly basis, right where it should. Where are we coming? Well, we've come from a drop-based rally, rally-based rally, an uptrend. So I could wait until price comes back and re-engages this demand zone, or I can wait for price to base in here and rally base rally out to this area of potential supply. Now, I don't fear this because price has been there a lot of times. And if I look at this in terms of even a bigger picture, right? Again, patience. Where is my next area of supply? Way, way up there. So options traders, you probably should be thinking about this one, right? This would be a great trade. We would need to wait for the market to rally above $15.50, $16, and as it breaks out of that range, boy, that's a beautiful vertical call spread ready to be traded. If I'm a swing trader, I'm either going to wait for price to retreat and buy it in one of these demand zones that are below the market, lower in my tide, lower in my range of price, or I'm waiting for another bullish fractal to be created, and it'll give me permission to maybe take a breakout trade as we break through this 1429, 1385 area. The only thing I need to worry about is from 1429 to 1539, or that $16 up higher time. There might not be a lot of profit in terms of the risk that I need to take on. So I might need price to take those supply zones out before I enter into the market. In other words, I might buy actually higher on this stock, but a greater probability of price going higher. All right, so that's TK. I do see a couple questions, so let me pause for a second here to answer a couple questions. Gene, anything that's popping up among a lot of our viewers?
No, just I want everyone to know that if you are listening in today, you will get a link to the recording once it's available. John mentioned that in the start of the session, but just to assure you, you will be able to review this once again to pick up on any additional information that you need.
So I see a question here from Henning, who asks in chart analysis in regular trading sessions or 24 hours. So I'm guessing he's asking is, do you do your analysis based on a 24-hour period or the regular trading hours? So again, this also depends on the market you're trading. If you're trading a stock that is only trades during the regular trading hours of the stock market, 9:30 to 4 o'clock, then that's your day, right? That's your 6.5 hours. That's your days, right? I'm not really going to be concerned about the overnight hours or the pre-hours, right? Because there's no trading in it. Now, some stocks and some indexes, for instance, the SPYs and Qs do have extended hours, so you could look at those extended hours. Forex is a 24-hour market, so you would be looking at a 24-hour daily time period. Futures markets, you have a range of daily sessions, anywhere from about 23 and a half hours to down to about 12 or 10 hours. So again, depending on the asset or the market you're trading, will determine your analysis. Now, if you're asking, do I do this analysis constantly throughout the day? No, I usually will look at the morning sessions where price tends to be a lot more active, and then come back and look at finding trading opportunities in the afternoon session towards the close, when my professionals are closing the market. So I hope that answers your question, Henny. So you see, Aaron is asking, Candlestick Patterns section of Barchart, what is the difference between engulfing and harami? So in there are definitions. There is a file in there, Aaron, you can look at. There's a link in there. And I'll show you at the end of our session some other webinars we've done where we talked about candlestick patterns. So I recommend that you go follow in that. So Curtis asks a really good question. He's talking about volume. Does it make a difference in trend analysis, and talking about supply and demands and candlesticks? Yeah, what I say, when we talked about velocity, right? We talked about velocity. So yeah, I want to look at those lower time frames in terms of some other technical analysis, and one of them would definitely be volume. So I do have some templates that I've already created that'll do that for us. And so we have a MACD up here. We have some moving averages, and we have some volume. So yeah, so what I like about this particular trade is, as we were making that rally-based rally right here, you can see that our volume was increasing, right, on a daily basis. So that would be a confirmation, right? I like to see rising volume with a new trend, or an existing trend, or a trend that is gaining strength. You can see our RSIs were rising during the same time, and our MACDs, right? Now, what is going on? Our RSIs and our MACDs are kind of turning a little bit, and we're losing a little bit of momentum. Well, that makes sense, because we've fell in to an area of supply. So this is where we're using that velocity of these intermediate and lower time frames to tell us when we come to one of these areas of supply or demand, does this tell me I want to continue to go with this trend or to be patient? In this case, I'm going to be patient, right? Because my momentum has changed. I've found an area of supply, right? My RSIs are a little extended, right? Now, could they go higher? Yeah, they could, but I need to see price stabilize and then rally higher. And volume is definitely one of the ones. On a breakout onto the upside, I like to see big volumes, but sometimes what you might find is on breakouts to the downside, you might find lower volumes. You won't see big volumes. And that's usually because price is starting to fall because buyers have stepped away. So in that analysis, maybe volume would be not as important on a downsiding trend as we're making a leg downward. But I still would look at those other technical analysis that I rely on, MACDs, RSIs, as well. All right. So Jim is asking again about volume. What about volume? Rising prices, rising volume. Lower prices, rising volume. Right? Definitely, Jim, for sure. Volume is the first analysis I will look at when I'm looking at my trend analysis, and then I'll look at some of these other ones. Okay. All right. So let's go back to and what I saw on Friday, which was kind of interesting. That's what I want to do here with the last bit of our time is notice that Tesla hit our bullish engulfing. Now it didn't hit on the weekly, but it did hit on the daily. All right. So let's change this to Tesla. I'm popping this out. All right. Here's our 6-month daily. Here's Friday's price action. There's our engulfing candle, right? All right. So at the daily level, what's our trend? Looks like it's up, right? A lot of higher highs and higher lows. Where are we in the cycle of price? Well, I see rally base rally, drop base rallies, rally base rally, rally base rally. Confirmation of an uptrend. What are my candlesticks that I'm seeing? Well, here's another hammer, usually a bullish candle, right? Right. So what are we seeing? We're seeing the market is continuing to move higher, trending higher. And so that would have given you an opportunity to look for maybe on that Friday, even before the close, an opportunity. What was that opportunity? Well, you could see that once we broke above this resistance on this green candle, again, on if we had good volume and move through this one, that would have been an opportunity to go long a Tesla. All right. Again, this is at the daily, but let's look at our weekly time frame. And again, what's our trend? Up. What are our fractals? Rally-based rallies, right? Market is not telling us it wants to go down. Where's our nearest area of supply? Well, let's think about this in terms of our high and low tide, right? We've come from way down here. We're making more and more demand zones, but we're getting closer and closer to what could be up here. We don't know what's up here, right? This crazy candle kind of distorts the picture a little bit, maybe somewhere around here. So we are getting a little bit high in our tide. So it could be a cautionary tale for us that maybe I do like to be long Tesla, but I could be running into a potential ceiling. If I drop down to our lowest time frame, right? Again, where would I look to re-engage this trend? In those areas of demand in those fractals that I've seen. So what did we see at the higher time frame? Rally-based rallies, uptrend. What do we see in the intermediate time frame? Rally-based rallies, drop-based rallies, uptrend. What do we have right here? Rally, base, rally. And this is what we're talking about, this confluence. We like to find these areas of entries and exits that are inside of our shaded areas that we discovered in our higher time frames. These are great little zones, especially as price is breaking away, and we wait for price to come back and test that zone. Price came back into our zone and shot back up. Now, in this time frame, this wave, we have now made two areas of supply. We have gone from rally-based rallies to rally-based drops, but I'm not concerned about this lower time frame as long as my higher time frame is still showing me those positive fractals, or in other words, those uptrends. So what could I do? Well, this demand zone has now been tested, and so I'll probably look at an opportunity maybe down here inside of my rally-based rally that was created on that Friday of last week, right? Using that confluence of higher time frames, intermediate time frames, and lower time frames. Now let's go back to this one again. Look at all these demand zones that were being created, and every time price came back and tested them, the demand held. Who's in control? Buyers. Every time price came back and tested them, buyers reinserted themselves. Demand zone. So don't be discouraged if you see an uptrending market that shoots away from you in the lower time frame. Be patient. Wait for price to come back to you. Wait for price to come back into your demand zone that's in these intermediate and higher time frames. Wait for those candlestick formations that you recognize. Wait for those fractals that you recognize that are associated with price movements. Okay, I hear the cuckoo on the clock, which means I'm on the 2-minute warning. All right, so what are some takeaways for you guys? Let's think about top-down chart analysis like reading the tidal chart, right? Where is high tide? Where is that nearest supply? Where is low tide? Where is that nearest demand? Is my trend rolling in or is it rolling out? Is my trend going up? Is my trend going down? And what is the velocity of those waves, those lower time frames, those ripples, right? Is my market moving very extremely fast, right? Stormy weather, higher volatility, or is it kind of just quiet, or is it just crawling along, right? Lower volatilities, you know, lower RSIs or MACDs, right? And when I get to the extremes, that's where I need to be more cautious or look for those opposing zones to tell me, hey, maybe this is a time for me to take pause and wait for price to reverse at that lower time frame. Wait for calmer waters or wait for price to take out one of those opposing zones. The higher the time frame we use to start our analysis, the greater the probability of the trend. Again, an importance why I want you guys to think about, no matter what style of trader you are, let's use dailies as one of our analysis. The higher the time frame also influences lower time frames, right? We wait for a price to fall into low of our high time frame, and then our high time frame trend will take over again. But as the example that we saw in the S&P, many times lower time frames can signal changes in the higher time frame trends, and we saw that in the S&P that our low and intermediate time frames, the fractals changed from drop-based rallies to rally-based drops And that brought about a change in our uptrend at that higher time frame. Recognizing these confluences between trends, cycle of price, candlestick formations, and the fractals that are being created between these multiple time frames increases the probability of price and outcome. In other words, we really want to find where we're low in our high time frame. We are now going to a drop-based rally in our intermediate time frame, and our lowest time frame has now confirmed with candlesticks that we're in an uptrend. In other words, they're all telling us the same picture. That gives us a much greater confidence and a higher probability of price outcome. And finally, why I love top-down analysis is I use confirmation and patience as the keys to my success. I wait patiently for the zones, and I wait for those confirmations based on these confluences of our chart patterns, candlestick formations, and the fractals that are being created. Look at that, Gene, right on top of 1 hour.
Right on top. That's right.
Right on top. Okay, awesome. So again, I hope you folks enjoyed today's session. Again, it's recorded for you. You know, if you want to be part of our Barchart family, there's a way to get a free subscription. I recommend this basic subscription. Try us out. Try out some of the tools and pages that we're using. But you can also supercharge your account by trying out some of our premium services for a while.
Yeah, let's talk about the next 2 weeks, John.
Yeah, okay.
Or let's not talk about the next 2 weeks. So yes, we are taking, again, a little short break here. We do not have any upcoming sessions scheduled for you to attend, but we will be back in 2 weeks. October, what was that date?
The 21st, I think, maybe. Does that sound right? No, 15th?
Let me look. October 20th, we'll be 20th. Back. Yeah. Right. So if you are on our webinar notification email list, and John's got the webinars page up there right at the very top, if you sign up, we will send you notifications when a new session is announced, so you can be the first one to reserve your seat in these exciting educational sessions. We'll let you know what's coming up next, but yeah, we're taking a couple weeks off here.
Yeah, Gene and I are going to do some planning. We're going to plan out the rest of the year. I'll give you a little bit of tease. We're going to look at a couple of different option strategies. We're going to look at long strangles. I think maybe we'll do an iron condor. We're going to look at maybe market sentiment and momentum. So there's a couple of cool ones that we've thought about, but we're going to do a little planning to, finish out the year strong. I know at the end of the year, we're going to go back and revisit our Dow, Dogs of the Dow, one that we did at the beginning of the year. So there'll be some cool ones. But before we go away today, I just wanted to show you here under candlestick theory, and Aaron was asking that about, you can see that these 4 ones, and again, today's top-down chart analysis, these all kind of go together, right? There's kind of a progression. First understanding candlestick charts, then a deeper understanding, again, price theory, and then how to use supply and demand with candlestick formations. And then today was really the 4th part of that series, supply and demand and fractal recognition. So, there are files inside of these that you can use and that are ones that we have displayed. Anything else, Gene?
No, that's about it.
Okay, well, I want to wish everybody safe travels, be safe out there, best of health, and the good of all trading.
And for me, thank you everybody for attending. We are glad that you use barchart.com and hope to see you back in a future session. Have a great day. Thank you. Bye.